Hello, ladies and gentlemen, and welcome back. While they say it's great to have a plan, and it's more important to also be able to see the forest from the trees, this week I think we've done a great job on the channel by taking a look at the market with an objective eye. We saw the inflation numbers come out. We expected between 4 and 5% volatility, and we got it. But the trap was then set. Markets made new highs, everybody became bullish, and all of a sudden, as fast as you could snap your fingers, things went bad. Now we're facing new lows that have just been formed across most major markets in the world, and we need to discuss this into $4 trillion of options expiration. Yes, it's quadruple witching again for the last time in 2022. Well, welcome back everyone to the Daily Show. We're talking about stocks, commodities, and cryptos today. Of course, we're covering off on the major news events, the macro data, the lead indicators, and everything in the charts that you need to be watching. It's been a pretty good week since the FOMC meeting minutes. I'm sure many of you out there have enjoyed some of the volatility. Some of you probably haven't. But we now enter our final big bit of news for the week, and that is $4 trillion of options expiring during quadruple witching. It seems like the Grinch has arrived back into the markets. Now, for anyone that doesn't know, quadruple witching is a very important event inside of markets. You must subscribe to the channel to find out more about this in the future. It's such a manipulative time. I'm about to show you why and how they've done such a great job. But check out here this quadruple witching event. We basically have stock index options, stock options, index futures, and single stock futures all expiring at the same time, and it happens once every quarter. So why do we care? Well, it increases trade volume, and there's a lot of money at stake, and of course we get a huge amount of intraday volatility. And it tends to be that the Thursday, the day before the quadruple witching, is usually the most volatile. That's what we just saw over the last 24 hours. If you follow us along at FX Evolution on Twitter, which I highly encourage you to do, I've just shared here the maximum pain statistics, which is where if Wall Street is to make maximum money, they would love the market to close as of Friday. Now, it doesn't mean that it's guaranteed to close on those numbers, but certainly with the last 24 hours of market movement, there is a great case to be said for a little bit of a rally into predominantly a nice close for the street. Remember, everyone with $380 and $420 calls and puts, they're not happy and they're losing. And this shows you the true extent of the manipulation in the markets. 6 million plus units, mostly expiring worthless. Yep, you've got to know what you're doing in markets, and you need to be able to read this data. So definitely pay attention to today's video. Next up, we have Elon Musk continuing to sell, of course, huge swathes of Tesla stock. It's probably the main driver, along with concerns about his Twitter stuff and everything else, that's causing Tesla stock to take such a huge dive. I think there's a whole bunch of factors to play in here, but we have been mostly negative on the stock. Is it time to turn bullish yet? We'll be discussing that a little bit later on. Let's look at the policy rate discussions that are coming in now. This is probably the most important style charts that we share on Twitter. And this is just an example of Morgan Stanley disagreeing with probably the market pricing. Morgan Stanley here says that they are expecting maybe a lower Fed terminal rate and for faster and quicker cuts. They're looking at that Goldilocks style scenario where we get inflation under control and the Fed instantly starts to cut to try to support the economy. This will be the discussion point of when does the Fed pivot in 2023, which they of course already pretty much have started to process this transaction or this idea in the markets. And then what happens after that? Remember, when the Fed pivots and they actually start cutting, you tend to see a market that actually goes lower after that period. And then partway through the pivot, partway through the cuts, you see the markets go back up. What first alerted us to potential bearish action here in the markets? Well, one of the things was the MACD cross. When we look at the statistics coming off this MACD cross, and we've got declining 200-day moving averages, they're not good. 1 week, 2 weeks, 1 month, 3 months, and 6 months later, you're not looking at a very healthy statistic for markets. Now, obviously, it's only one data point, but it was certainly one that we were paying attention to with everything else. We also know that 2022 is almost wrapping up, and that means that we look at it as a whole to see how bad what we just weathered is in markets. Well, guess what? We're now the 6th most volatile year since the Great Depression. Isn't that amazing? It's an incredibly volatile year, and what we've witnessed here is part of history. So for anyone that's made it through 2022 so far, give yourself a little bit of a pat on the back if you survived it, because it was a rough year. And for some of you, I'm sure it's been profitable, but for many others, it's been tough. And it is a tough market, there's no doubt. 2023 is probably expected to be just as tough though. So you're going to need to be fast, nimble, patient, and more importantly, have great temperament in markets. So where's inflation today versus the 1970s? Well, it's pretty much doing the nice drop now. Now, whenever we've started these drops, we've tended to lead on with them, and the market has actually gone down correctly. The mistake they made back in the 70s is obviously they didn't leave rates low enough or high enough for long enough, and they ended up getting reinflation later on, and Volcker, of course, famously stopped it after that point. This will be, of course, the storyline now. And more importantly, when you're looking at these CPI numbers or you're looking at any numbers out there at the moment, you've got to be paying attention to shelter. And of course, we need to be paying attention to food. They tend to be the sticky inflation numbers. And that's where we don't want to see it continue on here. Food and shelter. They're going to be some of the main sticking points of 2023. Are we already in stagflation? A lot of really smart people believe we are, and that's why things like gold and silver may also be some of the better trades in 2023 versus what we've seen in 2022, which has been the US dollar. More on that a little bit later as well. So a lot of people are calling for a Santa rally. Well, during bear market years, it tends to just be more sideways and Santa doesn't come to town. These are the difference in statistics when you pull bear market years versus normal bull market years. And it usually starts around this 15th of December. So we probably expect the Friday to be an up day and to quadruple witching. It'll make sense to the maximum pains we're about to see in the markets, but this is a very important point. Here's just an example of course, the 15th or 16th of December and where we tend to be and the rally that happens during normalized years. But let's jump into the markets. And I just want to remind everybody as well, at the end of today's show, we have the draw for the prizes that, of course, is a part of our Christmas giveaway. Many hundreds of you entered, so we've got that at the end of today's video. Make sure to stick around for it. Let's move over to the VIX and take a look at volatility. So you might think, wow, that was a pretty volatile day. VIX should be up massively. Well, it was mostly about implied volatility moving in. We knew inflation is the number one piece of data for every month. That's the scary one that moves the market. Then we had the FOMC. And then, of course, we've seen a fairly volatile day. We probably expect the VIX to float around within this 22 to 25, 26, unless we move underneath the 3750 area. That's going to be very important for markets. If that occurs, expect the VIX to be going above 26 and real fear to be coming in. Is it similar to some of the other times? It looks very, very similar to what we had during the August drop. And we saw a gap, a pullback, and then, of course, a rally in terms of the VIX. So volatility spiked. And at this stage, we're kind of almost mirroring that particular area. Now, why is it actually sitting like this? Why is the VIX looking like this? Well, part of it has to do with the yield curves. We're not seeing yields drop. The 2-year here isn't really dropping. It's remaining quite sticky. And that has a lot of people concerned about recession fears. Look, we've shown some stats here. We'll probably bring them in on our weekend video. It's very, very likely the US is already in a recession and that recessions will be called during 23. Recessions are, more of a word than anything else. But of course, that's now being used as the excuse for why markets are going down. The real reasons is that they ran away from themselves. There's a gap to be filled, and then we probably see the real decision. Let's have a look here at high yield bonds, a drop on the session. And in fact, it looks kind of like an island reversal potentially at the peak. Where did we see that before? Very interesting. If high yields continue to drop, it shows us that the market's not prepared to buy junk bonds, not prepared to buy the riskiest stocks. And this is something that we should be looking at. If we see a rally in stocks and a drop in high yields, be very, very cautious of that rally. We'll talk more about that soon. TLT, one of the favored positions from a lot of smart bulls. I don't doubt that they've been a very good position, and I like a lot about TLT, and I'm a big fan of course, this treasury idea moving through 2023 with cutting rates. It should do okay, and it's usually one of those defensive style plays. In 2022, it's been horrible, but it could still be good. I'd like to see a pullback though in treasuries before further rallies. As traders, it's not really a trade, it's more of a multi-month investment swing kind of concept, if not a little bit bigger. What about the dollar? What happened there? Well, this was very interesting. Let's have a look at the daily here and then put it in a weekly perspective. This weekly close, what happens here on the Friday could be incredibly important for dollar index, for currency traders, for gold, for everything. You'll notice that we hit into this area. We actually swiped the low and then we rallied up. Things changed massively in the last 24 hours. We saw retail traders go from being heavily short euro, US dollar to being slightly more bullish on it. All of a sudden, what do we see switch in the markets? Well, dollar index starts to strengthen heavily over that period. So it's very interesting to see that massive swap going on in the human psychology of retail traders. We managed to make a new high. We actually set some alerts above here in the previous video. We've obviously got these ones for the longer terms. And we'd expect that probably DXY will weaken and then potentially strengthen somewhere around this blue line to the bottom of the box, 103.63 to kind of like that 103.40. I'd like to see some buyers recommit themselves to DXY at this point, and then we should see weakness in gold, weakness in euro, and other pairs. It doesn't mean that the US dollar is back. And in fact, I've said this in the last video, I don't believe the US dollar is coupled anymore to the stock market. That, which was a big part of 2022, I think is disconnected for 2023. We'll explain this more in future videos, so make sure to subscribe for it. What about gold? Well, gold is doing okay. Obviously, we expect it to now rally somewhere around this 1800 zone or even this 1790 kind of 2 zone. We'll just put them on here. 93 into the 1800s. I'd like to see gold rally up as we see DXY strengthen or weaken, and then I would like to see gold go short. This could be part of what we call a massive distribution. And although I'm bullish on gold, we do need to just face some of the facts. The facts are so far that we had a very nice higher low trend line that got broken below in the last 24 hours. We also know that we spiked the high up here above our zone and then weakened off it. For buyers to come in, they have to recommit. And what we saw is we saw a new low being formed. So this is effectively a lower low. It could be part of what we call a distribution. And we've seen this through a lot of markets. So at this stage, we're kind of like temporarily bullish gold into potential weakness in the next week. What about oil? Well, it's respected the exact zone that we spoke about. Literally. It's literally respected the downward trend line and it's respected this level. Now, that doesn't mean that it's going hugely short yet. Let's look at the daily to put it in perspective. We didn't get an engulfing daily red candle, which means it didn't take this big green one and actually smash below it. We instead just got a little bit of a sell-off. And when we go into the 2 hours, what we're really looking for here is for it to take this level. So we want to see a new low being formed under 74.95. Once that occurs, you have to believe that the trend, that is the weakness at the moment, is continuing through on oil. Oil at the moment could still be setting up for a massive explosion. If it does explode through this downward trend line, expect to have to be bullish over the next week. This is a critical zone at the moment, still looking bearish, and we're hoping that rallies are met by sell demand. This level is the one that you wish to see broken, though. That's a big potential technical zone here in markets. We'll move over to Tesla, and of course, Elon Musk selling all of his stock all the time and retail traders buying all over the place. We got so close to the 150 in the previous session. We ended up opening at 153. For buyers that committed themselves to the previous day, although the market was down, Tesla actually was a pretty decent one. I showed it in the private community streams that we do, 7-day free trial if you're interested in the links down below. And this was one of the ones that I really wanted to say, okay, yes, I still think it can get down to these 136s, 140s quite easily, but it was hitting that technical level, that 150. Remember, max pain for Tesla is a lot higher. Let's in fact look at that just right now, and you'll notice max pain for Tesla is 177.50. I don't expect it to get back there, nor does it have to, but there's a ton of options, open interest, 1.65 million units, and these poor 190 call people, a lot of people got bullish based on this, and I was like, no, they don't want to pay them out. That would be no lobsters for Wall Street if that happens. So the 150 put, which looked great in the start of the week, ended up being absolutely I don't know who put this in, but these 190s were huge. And anything in here is a fair close. You wouldn't expect to see Tesla underneath 150 by too much, just because Wall Street doesn't like to pay off these large block levels. And we're in the zone at this stage. So we'll have to then look forward to the next weeks. We'll do that on the weekend video. Let's move over to Apple. Can you believe that Apple has taken off almost all of its CPI number? So this was where CPI came out and the market went up. Apple has now been actually quite a lot weaker than the rest of the stock market. Very interesting. It broke below that 140, and it seems like you would think Apple now wants to make it down eventually to this 134 level. And it's found this area here, and you probably expect it to bounce and then maybe find some weakness back at the 140. So I probably expect a little bit of a bounce on Apple. The lower highs helped us to do this analysis. I'm very happy with the community here. You guys did a great job of analysis, sending through things, just helping each other out. And I think we've done a great job, especially over the last week, from being able to have that patience to instead say, you know what, we're very comfortable with what's happening here. We see the traps, we see that. And that's thanks to you guys as well, making a great decision and just being good at doing your analysis. I mean, analysis is an insight into human psychology, and we've seen this with stocks like Apple. Another thing you might want to do on your chart sometimes is have a look at how things are performing relative to the market. And remember, I said before, Apple's not doing so well. Well, it isn't. It was doing fantastically, and then something happened in September where we started getting concerned probably about the American consumer. And you can see here, Apple has not been performing better than the SPY in recent weeks. And it's actually even broken through some of these trend lines here that were holding up very nicely with the ratio. Start to think about long shorts ratios. It's the advanced technique that many people don't use. And if you really want to take your technical analysis to the next level, that's one of those things that I really like to discuss. Let's have a look at the weekly closes here, just to put into perspective some of these stocks. Here is Amazon. You can see very nasty looking wick. If it closes like that, not positive for the upcoming weeks and potentially even month for stocks such as Amazon. Let's go through just a few others to look at weeklies. Google looks absolutely horrible. There's the Apple rejection, not so great. Let's look at Microsoft, another one, very nasty looking candle. Doesn't bode well for the future if it closes like this. And there's one of our favorites, Nvidia, looking shocking as well. So a lot of stocks, if they close around here, maybe a little bit of a bounce, they're still going to close as shooting stars, or some people call them as pin bar reversals. Nasty stuff here on markets. Let's move over to XLF. This is financials. Usually if things are bad, financials go bad. It was something we spotted. We talked about it. We expected the rally. The rally happened. It's now dropped to a new low. I would be very interested to see how this one closes, because as you might notice here, it gapped below and it's sitting there, and I probably expect it to gap up through the Friday. Now, I'm not bullish on financials, but if it does gap up and hold, that's going to make a very interesting weekend video. We'll check that out in the future. Semiconductors also very, very interesting, coming right back down to these lows. We can see that potential false break, trapping people into buying. It's very nasty out there, there's no doubt. Look at this weekly horrible looking thing. We'll find out how it ends up closing. Is it all part of distribution? At this stage, it looks to be that way. The same thing on industrials, one of the strongest sectors in the market, makes a new low underneath here. 24 hours later, we'll find out. And then let's look at the major indices. First up, we've got the DAX. Wow, that is a horror looking show, isn't it? Big drop, huge wick coming through into the supply zone. I know a lot of you have been short DAX. I've seen it in the comments, and it's come back into this little bit of roll reversal area. Again, you'd expect that little bit of a rally, potentially even jump up into here, maybe go a little bit further. And then hopefully it actually drops back down from that point and at least fills a gap that's been found through so many markets due to, of course, that previous inflation number. Let's look at the US 100. Another bad looking chart, comes off the trend line, wicks the high, obviously takes a lot of people's short stop losses. It's why we're talking about options so much in comparison to potentially the futures trade. And then markets made a new low. That's not good for most buyers, and it closed below, which is the key. It didn't just go below and then go, oh yeah, we're going back up. It closed below. So it looks like rallies could be met by sell demand, and you've got to be probably on the bearish tinge here with the weight of evidence we've seen so far. very careful. This is the way the market's looking. Could be wrong. Of course, you always can be, but these are what we've seen so far. The Dow was the same thing, broke out that trend line, then started consolidating. This was a nasty day, and we hopefully spotted it, and we talked about it quite a lot. Let's look at the SP 500. First up, I'll use the real market. You'll notice here a close below. That's the key to it all. There's a gap here as well. It's been left at about 4,000. So we'll just mark that gap in here. We'll just put that where it should be, which is about 3995. And 3995 is an interesting zone. I kind of expect, and this is a guess, but I kind of expect the market to do something like this. And then I would like it ideally to move to 3750, 3800. And this might take a little while to stuff around, and then we'll find out what happens after that. But this is the general concept that we have for the market at the moment. We were right about the drop. We were right about the low getting taken. Now we'd like to see a bit of a rally. It's not, could easily just go straight into this. If you're a bear, well, you've got to say, okay, what have I seen? What am I going to be doing next? All these types of things. If you're a bull, you need the high to get taken out. If that happens, wow, it's going to be a very nice trap. And I don't suspect that's the way it is, but certainly these are the two zones, 4,000, 4,050, key technical areas for the next week, and 3750, so many things. Gap fills down here, the CPI number where there's tons of orders, no doubt, sitting all the way through this area that didn't get filled. There's a lot to like about it getting back down to that level. We've already talked about maximum pain, but make sure you do go check that stuff out. Third week options expiration is the way to go. And with Bitcoin, it hit that 18,000, went a little bit higher than 18,000, which is above where I expected. If we look at it just in perspective of all the previous times, these are the supports. This is the resistance. It looks like it's kind of, again, rallies into shorts at this stage for Bitcoin. It's going to be really about the stock market, though. Bitcoin has sometimes front-loaded it. In this case, we'll have to be a little bit careful, but it looks like that 18,000 was a fairly decent sell-off zone for Bitcoin. And at this stage, we're not sure whether it's a really huge accumulation or this thing's going down. Remember, if stocks do make new lows, they get through 3750, you have to expect Bitcoin to make it down to those 11.5s and 9.5 and put some pressure on many Bitcoin bulls out there. What have we got in store in terms of news moving forward? Well, we know we have the flash services PMI, 9:45 a.m. And this is a big one. Well, it's just not actually a big one. It doesn't really matter. But the options expiration is the big one here. So flash services PMI is coming out. And if you're interested in finding out more about what we're doing in the next week, remember there is still a little bit of news coming out in the next week. Make sure to subscribe, smash that like button, and we'll see you in the next video. But let's now do the draw. All right, without further ado, it's time for us to, of course, do the draw for the Christmas giveaway. Many hundreds of you did enter, so thank you so much. We'll draw them in backwards order, so that means the first person will win the fourth prize, then the third prize, then the second, then the first. So let's go through who is the winner for each one. And we'll start off here by picking the random names. We'll see who's the winner. First one, Michael Barry. No, Michael Barry. Congratulations, Michael Barry. Will be in contact with you over the next 24 to 48 hours. And you've won, of course, the Ultimate Trading Masterclass. Let's go through the second person now. Let's see who wins the Scalping Masterclass. Jordan De Herrera. I'm probably saying that wrong. Congratulations, Jordan. You win the next prize. Let's now pick the next person. The options, Stephen NG. Congratulations, Stephen. Lucky 8882 left in the picker. So, yep, very well done. You win the options. And then for the group mentoring, probably the best prize. Let's find out here. Cameron Crockett, 887 left. So that's good. It's done it all. Congratulations to all the winners. Thank you so much for entering. Thank you for supporting us during, of course, 2022. And we hope that this was a great Christmas giveaway for the lucky winners out there. Subscribe, smash the like button. We'll see you in the next one. Bye for now.